So, first of all, congratulations to everyone who has AMC. 10 Ds for you guys. Please like the video. Please subscribe. And if you enjoy my content and want to support my channel, please check out my Patreon. Link in the description down below. So, AMC was the big story today, or the big winner, I should say, especially on Wall Street Bets on the subreddit. It was up about 24% today, and at one point it was like 31% up, I believe I was watching it. So, first of all, congratulations to everyone who has AMC. 10 Ds for you guys. Alright, now let's talk about this from a fundamental and technical standpoint. Alright, so I already see here in the aftermarket it's down 4%. So, some pullback, some profit taking. Now, what caught my eye here was the short interest. You see here? There is a 21% short float. So, over a fifth of the stock is shorted. And that probably had a big factor as of why it went up so much today. Probably a lot of buying pressure, and the buying pressure in turn caused a short squeeze or gamma squeeze, whatever you want to call it. There were definitely shorts that were buying to cover today. And let's take a look at the analyst ratings. So there are 10 analyst ratings. 1 says buy, 4 say hold, 1 says underweight, and 4 say sell. The average price target is $4.44. The street, the boomers, don't like this one. They don't like the stock. Alright, so let's take a look at the technicals for AMC. So, we see the RSI is sitting at around 68, and at one point this did break 70 today. But right now it's at 68, so while it's not quite in overbought and overvalued territory, it is quickly approaching that. So I would say you guys might want to start considering to sell here. Not saying you should, but you guys should start to consider to. Just based on my personal opinion, and don't hate me guys, but I'm gonna have to go with the street on this one, and the boomers with this one. I'm really not too bullish on this. We still have the pandemic going on, so while movie theaters are reopening, still not at full capacity, not at full business. We got streaming now, so, and we just saw with Disney, and it's not going to be just Disney. We're going to see a lot of companies do this dual streaming movie theater thing release. And maybe in the future, movie theaters are going to be a thing of the past. Maybe everyone's just going to sit at home and stream it. But that's to be seen. But overall, just fundamentally, AMC doesn't seem like the greatest company. And technically, the thing ran up 24% today. Like I said, over 31% at one point in the day. I personally would sell here. Maybe this has a little bit more room to go. But I'm quite confident when I say that this is going to come back down pretty soon. Within the next couple trading sessions, this is probably going to pull back, and there's going to be a lot of profit taking. We just saw the average analyst price target is like 450. Fundamentally, this price of about $13 doesn't really make too much sense, and it is approaching overbought and overvalued territory. So that's personally what I would do, and this is not financial advice. If I owned AMC at this point, I'd dump everything here. Great day, if you made 24% today, great day. Just take your profits and move on. If you are bullish, take your profits, wait for the thing to dip back down, and then you can re-enter at a lower price. I always say this, even if you are bullish, you got to take profits and re-enter. It's a lot better than just holding on, diamond handsing it, and you're going to lose out on potential gains there. Yeah, that is AMC. Gamma squeeze today, or short squeeze, whatever you want to call it. And I personally would look to take profits here. And I encourage you guys to do the same. Might run a little more, but I'm pretty sure this is coming back down pretty soon. So that's AMC. And also, please don't FOMO. If you want to get in this, don't do it at this price. Please don't do that. That'd be very dangerous. That'd just be kind of throwing money away. If you want to get into AMC and you don't have a position yet, please don't do it here. Wait a little bit for a pullback and then enter. Don't do it here. All right, let's do Alibaba. Pretty significant pullback today, over 6%. And it's not really moving too much in the aftermarket. So let's take a look at the analyst ratings. So naturally, I already did this a few times in previous videos, but we'll revisit this at this current price. So out of 52 ratings, 46 say buy, 5 say overweight, 1 says hold. And the average price target is $307. So about a 50% upside from the current price of $206. The RSI is currently at 25, so undervalued, oversold, and the analyst price target is almost near the high. The high is 319, the analyst price target, average price target is 309. I think everyone can agree here, boomers and apes, the street and the apes, that this is an excellent buy here at this price. Great entry point at this price at 206 and a 50% upside to the high / the average price target. Really not much to say other than that. Great value play here, and both the street and the apes agree with this. So if you guys want to buy Alibaba here, I would say go for it. Support you 100%, not financial advice. So here's Coinbase. Let's see how they did. Coinbase revenue tripled from last quarter as crypto prices skyrocketed. Key points. In Q1, Coinbase reported earnings per share of $3.05, the company reported on Wednesday. It also brought in $1.8 billion of revenue, up from $585 million in the fourth quarter of 2020 and $191 million a year ago. EPS was $3.05 per share. Not sure what the estimated was. Revenue was $1.8 billion. Again, not sure what the estimate was. But it seems like those are pretty great earnings. So let's take a look at this fundamentally and technically. And let's see how the market is reacting to these earnings. It's up in the after hours, so market is reacting positively to these earnings. They like it. It's down 6.5% for the day. Let's take a look at the analyst ratings. So out of 12 analyst ratings, 7 say buy, 1 says overweight, and 4 say underweight. And the average price target is $430. Big upside there, from 272 to 430. It's about a 60% upside from the current price. So let's take a look at the technicals. Okay, so there's really not too much to go off of here because this just started trading 1 month ago. Okay, the RSI is at 36 right now. So while it's not in oversold and undervalued territory, it's approaching that. It's very close to that. So you could justify a buy here. I personally would probably wait a little bit longer to see if this falls below 30. But again, the average price target is $430, which is what the high was. And that is about a 60% upside from the current price. So a lot of upside here. And I can't blame you guys. I would support you guys if you wanted to buy here at this price of $270. Again, I'd probably wait just a little bit more to see if I can get this at a lower price, but really can't blame you if you want to just buy in right here. Very good value play. A lot of upside, 60% upside. So that is Coinbase. Very good earnings. Market reacting positively to this. And a lot of upside to the average price target. So yes, if you guys want to go for this, go for it. I'm with you. Not financial advice. Got a few articles about Disney here. We'll go over them very quickly. Then we'll just talk about fundamentals and technicals. So this one says options traders fade Disney ahead of Thursday's earnings reports. Basically, all this means is that options traders are bearish on Disney ahead of earnings. It seems like they would be correct. We'll see what the exact earnings are in just a second, but it appears that it's not good. Disney misses on subscriber expectations. Parks revenue still hurt by C-19 restrictions. Key points. Disney reported second quarter results Thursday, posting lower than expected revenue and subscriber counts for its streaming service. The company missed on subscriber estimates for Disney Plus, coming in at 103.6 million paid subscribers. Hey, that's a lot of subscribers. Come on. EPS was 79 cents. The expected was 27 cents. So that's a huge earnings beat there. Almost by 3. And the revenue was a slight miss. It was 15.61 billion and the expected was 15.87 billion. By any normal standard, this seems like pretty good earnings. But I guess in the streaming world, it's a little different. It seems like when it comes to streaming companies, people care more about growing subscribers rather than actual earnings. We saw that with Netflix. They had great earnings, but they weren't growing subscribers as fast as investors wanted to. And as a result, the stock sold off. So I guess we're seeing this similar thing happen here. They were expected to get 109 million subs, and they only had 103.6. So that is kind of a big miss. That's it's like a 5.5 million subscriber miss. All right, let's take a look at the fundamentals and the technicals now and see if this is a good buying opportunity. All right, so we see here Disney closed at 178 and now it's down to below 172. So pretty big sell-off after hours as a result of disappointing earnings. I shouldn't say disappointing earnings, disappointing subscriber count. So out of 28 ratings, 19 say buy, 1 says overweight, 7 say hold, and 1 says underweight. And the average price target is $209. So at this current price of 172, that's about like a 20% upside there. Give or take, about 20% upside for the average price target. So let's take a look at the graph. I think this is a pretty decent buy. The RSI is currently sitting at 36, but it's probably a little lower now after this aftermarket sell-off. So we'll see what it is tomorrow, but it's probably more around 30 now. And, when the RSI hits 30, that means undervalued, oversold. Even if you're not trying to time it, I do think Disney is a really good stock. Fundamentally, like everyone can agree with that. They got media and they got their parks and their cruises and all that stuff. It ain't going anywhere. It's a great company. Now, in terms of a value play, I'm not so sure. Like, obviously, yes, like, as I just mentioned, 20% upside. If you're just looking for 20% upside, sure, go for it. I'm with you 100%. But, that being said, there are many other value plays that are better than this. A lot more value, a lot more upside. I can't blame you if you guys want to buy into this at this price. Buy the dip. This seems like a good entry point, relatively good entry point. Maybe you should wait a little more to like 165. That's what I have the next level of support at. But, yeah, if you want to buy here, can't blame you. 20% upside. Boomers like it. The apes like it. Pretty good play here. But all I have to say is there are many other plays that you can make that are better than this. So that is Disney. Disappointing earnings. Decent buying opportunity here. Thanks everyone for watching today. I appreciate you guys. Please like the video. Please subscribe. And if you enjoy my content and want to support my channel, please check out my Patreon. Link in the description down below. You apes already know, diamond hands to the moon. I'm Ty. This is Smarter Gambling. See you guys tomorrow. Peace.